Good morning, everybody. Hey, welcome to Friday, the end of the week, the end of the trading week, going into the weekend. Yesterday was a great day. Today, not starting off to be so much. We're giving back most of what we got yesterday, at least right now at the open. So, Dave will be with me momentarily. But before we get started, I do want to remind you of our free report that we're giving away that I think makes a lot of sense for folks that are either retired or are you're getting ready to start thinking about retirement. You're 5 to 10 years out from retirement. It's easy to get. All you have to do is text the word retirement to 863-285-3815. That's right. That's that simple. Get your phone out, text the word retirement to 863-285-3815. Hey, I'm looking forward to our show today. Stay tuned.
5.7 Light FM. Andy Grammer there. Hello and good morning and howdy. Everything's coming up roses. It's a gorgeous day. Except, of course, in the trade war where we're just getting ugly with each other. Let's see what's going on with your money this morning. Phillip Statler is in his office down at Statler Financial Services in the middle of downtown Sebring. You know, I've always said that when countries start arguing with each other, Philip, the language and the attitudes really resemble second graders in a playground fight at recess. And it really is starting to sound that way, isn't it?
Yeah, it is. It sounds like everybody's going to pick up their balls and go home. They're going to take their toys and go home, and we're not going to talk to each other.
Yeah, poo on you. The other day we said, that's it, we're mad, so we're not going to let any of our businesses without special permission deal with Chinese companies like that big cell phone company, Huawei. So China turns around and says, well, if you're going to do that, we're just not going to talk to you anymore. Second grade? Maybe kindergarten, huh?
Yeah, definitely. So that's definitely the tone that we're seeing right now, at least from a couple articles that I've read this morning. I get it out there. That this whole deal with what happened, I guess yesterday or day before, where the president came out and said we're blacklisting, Huey, and so because of that, American companies cannot sell to that company, and so basically the Chinese people said, yeah, look, that's just a no go. We're just not going to talk to them because you stepped over the line and gone too far.
No, geez. Yeah, for the sake of background, Huawei or Huey or however they pronounce themselves, because they make cell phones, Qualcomm, a United States company, has the patent on just about all the chips that really go into the guts of the cell phone, including the modem that actually communicates with the cellular system. So that's pretty crippling to one of the main product lines that Huawei makes. So it is kind of a blockbuster decision. And we might want to remember it was just about a year or so ago that we banned business with another Chinese electronics manufacturer and ended up darn near closing the company down. So we got some leverage even on the electronics side of the fence.
Yeah, we have, and so we relented that time without really. I don't know that we really got anything in exchange for that relentment. And so it's going to be interesting to see what happens here and what because this does really cripple China. And if you think about it, when you start knocking down the cell manufacturing industry, that's going to take away some communication ability for the people in China.
Oh yeah, it's not going to be good for either side of the pond because a big chunk of our phones that we buy come out of China. But if they can't make the dang things, it's going to mess up both their people and our people. And about the only beneficiary I can think of to this are those two manufacturers out of South Korea that have got to be absolutely drooling all over themselves right now. Samsung and I've got a brain flatulence, the other one, but two of the big manufacturers over in Korea have got to be happy to hear this going.
I would think so. Definitely should pick up some of their business anyway.
I've got to assume so. Other than that, it's been a relatively news-free period, and that's more than enough to keep us busy. We've had a couple, 3 days worth of substantial increases on the market. This little kerfuffle going back and forth, I'm just going to bet a nickel probably is going to turn that tide backwards again, though.
Yeah, it looks to me like we are definitely giving back Let's see. When I looked earlier, we were giving back. Yeah, we're giving back more than what we took yesterday, or what we got yesterday. So we are definitely in a bold red state right now.
That would be a good description for it. And just to add fuel to that fire, the reports that we had this morning didn't help a bit either. Since I moved here from a big agricultural area, when I see John Deere reporting, I always look at that one, and they had a miss, and then they're going into a period where their primary customer base is going to be hurting because agriculture is always one of the footballs that China uses when they start getting into trade disputes.
Well, as do most countries that get into trade disputes, start to look at agriculture first. But you're right, Deere did miss. They missed by 10 cents a share below what was expected. Their revenue, though, did exceed what the analysts had expected. But the downside is they cut their full year forecast, saying that, the persistent uncertainty in the agricultural markets is really weighing heavy on their outlook. They just don't know what's going to happen with these trade tariffs. And so they're trading down today a little over 3.5% this morning.
Now, what their investors want to see. Have you got another bit of news that might reinforce that a bit, or are we all bad news on the earnings reports?
I don't. I mean, we did have one company that beat, but there's still stocks trading down, and that's NVIDIA, the graphic chip maker. They beat by 7 cents a share. Their revenue was slightly above what expectations were. They've had a growing demand for their gaming chips. But even with all of that being said, they're trading down about 0.6% this morning.
I'm kind of getting the feeling we're just in owly humor overall these days, aren't we?
I think right now we are. I mean, I think this the trade deficit, the trade war, is causing all the stocks to fall right now. We've got another popular name, Pinterest. It went public in April, so this will be kind of its first quarterly report. And so they had a pretty substantial loss in the first quarter of $41 million. And so that's weighing on them a little bit. I guess that was a little bit bigger loss than was expected. Not that anybody follows them yet. I mean, they haven't got enough track record for people to start following them yet. But that's got them trading down 17% this morning.
Well, gosh, that's not fair. You only lose $41 million. That ought to be enough to celebrate, right?
Well, and you don't know what were they supposed to lose? I mean, it's their first quarter reporting. So another name that I have that nobody's going to recognize, it's a Chinese search engine company called Baidu, I think is how you say it. But they came in top line and bottom line missed on both of those things. We don't have any actual details. But they are getting hammered this morning also, down 12%, and they will open at a 52-week low at this rate.
Even the Chinese companies aren't doing all that terribly well this morning. Setting the table, a couple of tidbits as much as anything. Apple is suffering this morning because word came in that the tariffs are messing with their supply chain for the iPhones and the iPads, which probably won't come as a surprise to anybody. So even the people that are issuing interim guidance reports are kind of on the stinking thinking side of the fence, aren't they?
Yeah, they really are. And then let's talk a little bit about, the 10-year Treasury. We talked a little bit yesterday how it had bumped back up to 2.4%, which was still relatively low compared to where we were last year. But now we're getting down below that 2.4. We're down to 2.373 right now on the yield of the 10-year Treasury. That's just another indication that we're going to safety.
Yeah, and I noticed that's also only 2 basis points ahead of the 3-month Treasury bills. And that's an indication that investors expected to hang around for a little while as well.
Well, that's right. Yep. That's so. And the next thing is, how close are we getting to that inversion again?
Yep, that's 2 basis points worth of inversion difference, which means I'm pretty sure the 5-year we're already inverted from, just guessing, and I don't have that number. Setting the table for the morning, we mentioned yesterday was an up day, 214 up on the Dow, 75 up on the NASDAQ, and 25 up on the S&P. You wouldn't think there were anything going on in the world to upset things. Then we started yelling at China again, and 45 minutes before we open, Phillip, I'm betting we're looking at a lot of red ink, aren't we?
Yes, sir, we sure are. We've got the Dow retreating 215 points at about 0.8%. We've got the S&P 500 down 20, and we've got the NASDAQ down 75, which is about 1% of the futures. We got gold and silver both down. I would have thought with the way we saw it, we would see a little bump in gold, but we're not. We're seeing those two precious metals staying down. The only up thing we have today is the one thing you and I don't like going up, and that's crude oil. Up 0.75% to $63.33 a barrel.
Well, goody. Yeah, gold and silver, I would expect, just given the fact that they have a tendency, in addition to being hedgers, they're also panic buys. I would have expected them to start going up a bit, wouldn't you?
Yeah, I would too. I guess maybe more money's going to the treasuries than it is to the precious metals.
Judging by the yields, it looks like it. Well, we're doing everything with China except calling each other poopy heads. At that point in time, we will have officially graduated to kindergarten, and that's messing up the world markets as well. About the only thing that's up in the Asian rim is the Nikkei over in Japan. Europe is saying, oh, God, here we go again. So they're all trading down as well halfway through their day. Phillip, advice always needed to be able to make sure that my investments keep growing or at the very least stay stable. That takes an unbiased advisor. How do I find you on the phone to get that advice?
Give us a call at 382-0037. You can follow us online at statlerfinancial.com. Like our Facebook page, because we redo this every morning in case you miss us first thing at Statler Financial Services. Like our page there. And then join us every weekend for the Statler Financial Services radio show, noon on Saturday, 10 a.m. Sunday mornings on News Talk 730. And this week, Dave, we're talking about market volatility.
Ooh, how timely, right?
Exactly.
There's always a possibility of a bear market right around the corner, and the way things look with China, you never know. Phillip, thank you so very much. We will catch you on Monday morning right here on Light. Fair enough?
Fair enough, buddy. You have a great weekend. Talk to you then.
You too. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be?
Hey, again, thanks for joining us today. Just want to remind you about our free report on retirement strategies. Text the word retirement to 863-285-3815. Text the word retirement to 285-3815. You guys have a great weekend. I look forward to speaking with you on Monday.